Hello and welcome to the Islamic Finance Weekly, where we bring you key developments in the non-interest finance market. Interest rate has played a central role in economic policies of developed and developing countries, but the excesses of an interest-based financial system led to greed exploitation to the 2008 and 2009 market crisis. The advent of non-interest finance, which acts on ethics, have attracted investors that embrace this segment of the economic system to deepen financial inclusion, achieve equity in the distribution of resources, and ensure fairness in the market. On today's episode of the program, we'll be looking at Islamic finance, prohibition of interest and economic stability. Joining us this afternoon for the discourse is the Deputy Registrar of Nungu Business School, Mrs. Raheemat Alimi. Thank you for joining us on the program, Mrs. Raheemat.
Thank you very much, Bukola. It's really my pleasure to be here, and I'm really honored to be part and parcel of your program. Thank you once again.
We appreciate you for coming on the program. Now, Islamic economists have argued for the adoption of a profit rate rather than an interest rate-based system. Tell us, what is Riba and how does it affect the modern concept of economics?
Islamic finance basically is designed to operate based on Islamic principles. That is, it is guided by the Islamic Sharia. Under the aspects of Islamic Sharia that deals with finance, that is known as muamalat, there is a maxim that states that everything is permissible except what is declared impermissible. As such, invariably, there are some elements that are rejected by the Islamic Sharia. And because they are rejected by the Islamic Sharia, they are automatically rejected by Islamic finance. There are 4 of them. Riba is the first, which is we are going to talk a bit more about in detail. There's also garar, which is uncertainty or ambiguities. There's maisir, gambling, and the 4th one is investment in unethical products and services. Literally, Riba refers to increase or addition or growth. It can also imply multiplication, that is an increase that is more than what is ordinarily due. Riba is expressly prohibited in the Quran in about 7 different verses. And one of them, Quran chapter 2, verse 275, states, O you who believe, fear Allah and give up what remains of your demand for usury, that is riba, if you are indeed believers. So this implies that as long as you regard yourself to be a believer, you are supposed to avoid anything that has to do with riba. Concerning the modern concept of economics, Islamic economics is very closely related to it. It's very similar to it. The only difference is that you are viewing it through the lens of a strong social conscience or a strong moral filter. So those particular things that are supposed to be removed from the that are not allowed under the Sharia are those things that are also not allowed when you look at modern day economics, and that is what makes it acceptable under the Islamic Sharia. Islamic economics employs the concept of participation in enterprise. It's all about using funds at risk on a profit and loss sharing basis. In other words, Islamic economics is all about financing an asset-based transaction, and the risk that is involved is borne by all parties. Riba is prohibited in Islam because it creates societal injustice.
Sure.
When you have riba in any transaction, the owner of the wealth or the investor gets returns without actually bearing any risk, and it is the other party, the lender, that ends up bearing all the risks that are involved.
From your explanations, riba is prohibited in the Holy Quran, and even according to several religions, it is prohibited, hated, and disgraced because it possesses exploits societies, peoples, and causes socio-economic justice. Now, for broader perspective, can you share with us the types of riba and their descriptions?
There are 2 major types of riba, 2 classifications of riba. The first one is known as riba and nasiha. It is also called the Riba of the Quran. That is because it is what has been described directly in the Quran. It is where you have a situation, where you have a demanded or required increase in the principal of a loan. For example, I wish to take a loan from you. You wish to take a loan from me, and I tell you at the get-go or even later on that, okay, when you're returning the funds to me, there has to be something on top of it, something extra on it. That, of course, is riba. If the loan amount, for instance, is 100,000 naira, and I ask my debtor to return it with 20% increase, that is, return a 20,000 naira extra on top of the principal, that 20,000 naira is riba. So riba al-nasiya, of course, also refers to monetary riba, or the riba on loan. The second type of riba is riba al-fadl, also known as the non-monetary riba, and it is what you find in sale and exchange contracts.
Business transaction.
Yes, exactly. So what happens here is that you have the payment of a premium by one of the parties involved on goods of the same kind. For example, two parties wish to transact on the same kind of item. For instance, dates. I wish to exchange dates with you, and what now happens is that because one is of a lower quality, a higher quantity of it is given in exchange for the higher quality dates. This particular type of riba is also known as the riba of the hadith, and that is because there was actually a hadith of the Prophet ﷺ where he was presented high quality dates known as brownie dates by Bilal radiallahu anhu. And the Rasul, in the course of conversation, asked him how he got about those dates. And Bilal explained that what happened was that he gave a higher quantity of a lower quality date in exchange for the higher quality dates. The Rasul immediately told him that this was a form of riba. There are some scholars that also advocate a third category of riba, but they are actually in the minority. They call that riba al-jahiliya, or the pre-Islamic riba. And it is manifested when the lender asks the borrower, at the time the borrower is about to pay up, whether he wishes to pay up the loan or whether he wants an increase by, also increasing the time, being given an extra time to pay up, and then of course he will get a higher amount in form of the debt. So those are there are two major types, like I said, and the third one sometimes considered.
Well explained, Mrs. Raheemat. Even in the Holy Quran, the Almighty legalized business that are Sharia compliant. And while doing our business, we should also avoid maximization of profit. So
Absolutely.
that's just the main part of Islamic finance, to avoid interest. Even if you want to get profit, you should not maximize profit in order not to inconvenience other people, according to the Islamic faith. So one of the main issues of prohibiting interest is that interest rates are used to regulate demand in modern finance. So what are the effects of non-interest banking on entrepreneurship?
As we know, entrepreneurs are generally very creative people, always they have brilliant ideas which they wish to convert to goods and services that can be to the advantage of the entire society. And of course, they always seek the opportunity of financing while succeeding in their work and at minimal cost. The underlying principle of Islamic banking is the principle of justice, and that is an essential requirement for all kinds of Islamic financing. When you talk about profit sharing in a finance project, both the financier and the beneficiary will share the actual or net profit or loss, rather than throwing the entire risk burden on the entrepreneur. Islamic banks do not consider only the credits. Exact, they both share the risk. So Islamic banks do not just focus on the credit worthiness or the customer has in his account. What they are focusing on is how viable the business is, how likely it is to yield the desired profit. Another important relevance that forms the basis of development of Islamic banks is the relationship with the depositors. Depositors are regarded based on the kind of contract that exists between the bank and themselves. So Non-interest banks, without mincing words, are very important to entrepreneurs. That is because, one, they provide funds for entrepreneurs at a shared risk, on a shared risk basis. Of course, this elevates socioeconomic well-being because returns are taken only if the venture is successful. Also, they provide entrepreneurs with non-interest loans. These are generally easier to handle by entrepreneurs. The non-interest banks provide equal opportunities when giving out facilities to entrepreneurs. Like I said earlier on, the focus is not on the creditworthiness of the client, but on the profitability of the idea that is bringing forward. Also, you have the creation of a very robust relationship between the entrepreneurs that are involved with a non-interest bank. Islamic banking is definitely relevant to entrepreneurs. And of course, as we said earlier, the most difficult factor for most entrepreneurs is sourcing capital. And Islamic banking has come in to break this barrier such that entrepreneurs are no longer affected by the lack of capital.
From what you've said, Islamic banking is very useful to individuals, especially entrepreneurs, as it offers loans and assistance without collecting interest. And they even share the PLS, that is profit and loss sharing.
Yes.
Thank you very much for those insights. So what are the options for mortgages? Can someone take loan with interest to buy a house? Is this permissible under ethical finance?
Okay, the straight answer to this is no.
No. Okay.
No.
So what are the options?
What are the options that are available? Of course, we know that there's a legal need. This person actually needs to possess a house, for instance. Of course, there are alternatives under Islamic finance that one can use to finance this particular need. There are several of them. You could look at the diminishing musharaka option, also known as musharaka mutanakisa. That particular option offers the client and the bank, to come together in a partnership, because musharaka is all about
must own diminishing musharaka.
Exactly. The bank, they actually pool their funds together, and then the client buys off the equity share of the bank gradually until the property belongs wholly his own. There's also the option of ijara, the financing ijara, also known as an ijara muntahi abitamlik, where the bank purchases the house and then lets it out to the client for rent over a period of time. Then either during the duration of the period or afterwards, they have another arrangement which allows the ownership of the house to be transferred to the client. Yet another option is that of murabaha, although not too popularly used. Murabaha is the cost plus kind of contract. In this case, the bank could buy the house, add a markup, and then sell to its clients. And the client can either pay on the spot or pay on a deferred payment basis. There's also the istisna option, where the client actually outlines exactly what he wants. He wants the bungalow that has four bedrooms, each one en suite with a guest bathroom, just actually spell out what he wants. And then the bank goes out, on a parallel istisna contract to get that particular specification made, sell that house to the client, and then get their money back, either on the spot or over a period of time. So those are some of the options that the Islamic.
So Islamic home financing is strictly an exchange of assets.
Exactly.
And they must own a diminishing musharaka, ijara, or murabaha in order for the assets to be Islamically accepted.
Yes.
So from what you've explained so far, so the reason why Riba is prohibited is that it causes social and economic inequality. So tell us the benefit for an individual that invests in ethical businesses, Islamic finance, Islamic banking, and Islamic financial services as a whole.
Yes, non-interest. In fact, the entire gamut. The advantages are numerous, and I would point them out, one after the other. Of course, I'm sure we won't be able to cover every single one, but we'll talk about them one after the other. There's the fact that there's financial justice and fairness. Like we said, the foundation of Islamic banking model is on the profit-sharing principle. So the risk is borne by both parties, both the bank and the customer. And as such, the system actually contributes to a more equitable distribution of income and wealth. So that is one thing that the customer enjoys. Also, Islamic banking is a form of banking for all. It is not restricted to just the Muslims. Even non-Muslims can participate. And it engenders financial inclusion. There are some people who are actually aware that it's good to bank, but they are, because of their own ethical beliefs or religious beliefs, they do not get involved. So with the advent of Islamic banking, the expansion of Islamic banking and availability of it, they are actually able to express themselves and reap from the benefits therein. There's also the aspect of transparency. Islamic banking is transparent. Everything has to be done in a fair and transparent manner. Fairness is very important because we don't look only at ourselves, but also at the comfort of everyone around us and the environment in general. Also, another advantage is the ethical and moral dimension. Like I said, some people are holding back because of their ethical and moral beliefs, but with the provision of something to suit their morality, then they can go ahead to invest or undertake other financial services. Earlier on in the introduction, you talked about the financial troubles that happened in 2008, 2009. Islamic finance discourages speculation because a lot of things that fell apart at that point was as a result of speculations gone awry. So Islamic banking discourages speculation. You have because it's a source of instability. So Islamic banks refrain from carrying out such activities, and they rather focus on deployment of capital to the real economy. There's, of course, financial stability. That's another thing that one can enjoy by being part and parcel of the Islamic finance world. There's an accelerated economic development. Like you said, they're always willing. There's always a package, to help the entrepreneur and the individual to build up. And another beautiful thing is that there's the non-compounding of late payment charges. So if you're late in paying up a particular payment, it doesn't get compounded. There's something like compounded interest that adds to the burden of the individual. So those are just a few. There are quite a lot of them. Quite a lot of them. Yes.
All right, from what you've explained so far today on the Islamic Finance Weekly, that Islamic finance lay great emphasis on social justice, inclusion, sharing of resources between the have and the have-nots. So thank you so much for talking to us on the Islamic Finance Weekly today.
I enjoyed myself.
Thank you very much. Have a nice day.
You say thank you.
Yes.
Bye.
Bye. According to Quran and Hadith, Surah Al-Harum verse 39, and also in the Bible, Psalm 15 verse 5, Riba, known as interest, is prohibited. The growth of Islamic finance in Nigeria hinges on the adoption of the opportunities and value that the non-interest market brings to the country. Amidst the debate among Islamic scholars on riba, it is clear that the goal of the Islamic economy is broad-based economic well-being with full employment and optimum rate of economic growth. It also believes in the stability and value of money, a just return on investment and development projects. Islamic finance harps on socio-economic justice and equitable distribution of income and wealth, which is an important strategy for achieving an inclusive economic system. And that will be all for this edition of the Islamic Finance Weekly. Connect with us on www.proshareng.com for more videos and news on Islamic finance. Follow us on our social media handles displaying on the screen. Till we come your way again next week, please stay safe and have a great day.